Hello students. Before learning how to make financial statements or accounting statements, it is very important us to know that who are these people who require accounting information and for what purpose they would be looking into or interested in the accounting information and financial information for a company. So, in this video we will see the users of accounting information and the purpose for which they require to see the financial information and accounting information for a particular company. So, the users can be categorized broadly into two parts, the internal users and the external users. Internal users means the people, the person who are internal to the firm, internal to the organizations, and external persons who are stakeholder of the organization, but they are not internal part, they are in the external environment of the company. So, first we will talk about the internal users for accounting information. The number one internal user is the owners of the company. So, these owners are the promoters of the company. They have promoted this company, they have arranged the resources, taken the investment decision making and financial decision making, and they are interested in accounting information because they would like to know that the company which they have promoted, what is the result and outcome of the operation of that particular company. That simply means, my dear student, that the owners are interested in the profitability of the company. So, with that profitability, they would be taking some strategic decision making, whether to expand their business operation in the core business or whether to diversify, and what the future course of action they will be taking to be sustainable in the future. So, these owners who are the real stakeholders in a company, they are interested in looking into the accounting numbers so that they can take various strategic decision making for the company. So, they will basically be interested in profit and loss statement and the balance sheet and the cash flow statement. So, for next year and for future years, some course of action, some strategic decision making may be taken. Another internal users of accounting information are the managers. One important thing you need to understand here is that in corporate form of organizations, ownerships is different from the management. So, the people who invest money, who has promoted the company and put their money in the company, are different from the people who are managing those resources, managing those money and managing the operations of the company. So, management are the people who will implement the strategic decision making taken by the owners and the shareholders. So, manager is the user of accounting information because they have to monitor the operations of the company. They have to see whether their operations are profitable, whether they have efficiency in producing the goods and services, in marketing the goods and services, and they are entrusted with the responsibility of making budgets also. So, for making budget, they need to know the accounting figures, the accounting number and other financial informations. Also, for monitoring, they need to compare their budgeted figures with the actual figures, so as to know where are the variance or how their planning has deviated from the actual figure. So, for all these things they need to know the trend, they need to know the year's number or the quarter's number, so that they can in time put their action or plug in the loopholes where they are going wrong, where there are deviations in the performance, and can have a smooth budgeted and planned operations for the business. So, management, they need to know the accounting figure for all management accounting work, for budgeting, for costing, for taking a decision as to what should be the price of a product, what should be the human policy, where should be the financial resources be deployed, and all these things. Manager need to take all such decisions, and for such things they need to know the past numbers. So, they are much interested in the accounting information for a company. Another person who is interested in accounting information, who is also an internal person, is none other than employees. So, employees of the firm are also the stakeholder in the firm. because they are interested in knowing what is their future with the company. So, if company is growing, then they may advance in their career, their job security will be there. So, they are generally interested in these accounting numbers, so as to see what is the outcome of the operations of the company, in which direction, what are the sustainable growth rate of the company, so that they can decide for their career also. Other than that, these days companies also provide some sweat equity, that is ESOPs to the employees as a part of their compensation package. So, employees are also now the owner of the shares of the company, they own the shares of the company. So, they are also interested in the overall profitability, because they would be now sharing the profit of the company, being the shareholder. So, they are all again interested in getting the result, return on investment and the return of their equity. So, these are three basic type of internal users of accounting information. Now, let us talk about the users, those who are external to the organization. The first one is the investor and shareholders. Now, let me first clarify the difference between the owners, which I have taken in internal, and now the investors. Owners are the person who has promoted the company. So, generally they take positions in the management also. Yes. But investors and external shareholder are the persons who are investing in the shares of the company, maybe private equity or maybe shares that are floated in stock exchanges, so as to participate in the growth of the company, so as to share the profit and fortune of the company. So, these shareholders and these investors are interested in knowing how profitable is the firm, because they are going to invest their money in the firm, invest their money in the shares of the firm. So, they are interested in knowing the profitability, the operational efficiency of the company, because they need return. They are taking risk by investing in the share of the company. So, they want themselves to be compensated by return. So, how profitable is the company is their major concern. For this reason, they are interested in the financial accounting information and the final accounts basically, right. In theory, we say that management is different from owners, and shareholders have the ultimate right to run a company, because they take strategic decision making. So, all these external investors and shareholder also, they have a voting right to vote for the strategic decision making for the company, right. So, they are the owner only, but they are external because they do not generally participate in the day to day operational management of the company. Another type of external stakeholder who are interested in knowing the financial accounting information of the company is the lender, right. So, there are only two parties who will provide fund, who will provide the required capital to the firm for the operations of the firm. The owners, investors, number one, and second one is the lenders. So, you can invest in a company not in the form of shares for sharing profit, but also as a creditor who lend money to the firm in expectation of a fixed rate of interest. So, the instruments like debentures and bonds, if an investor invests in such instruments, he is putting his money in the firm in the form of the borrowed capital. So, these guys are interested in definitely the repayment capabilities of the company. So, the lenders, they may be bank also, because bank loan is also a source of capital. So, these lenders are interested in looking into the accounting information to know the credit worthiness of the company. Credit worthiness means how capable, financially capable of this company is to return their capital on maturity and also to pay the regular interest to them. This is a very common thing, because if the financial stability or the financial soundness of any firm or any entity is not good, you will not give your money or not lend your money to such entity. So, how do they come to know whether a firm is financially sound or not? They are interested in the numbers. By analyzing the number, by analyzing the stream of cash flow for their interest payment, regular interest payment, they are interested in looking into the financial accounting information of a particular companies, because they are putting their money, they are lending to the firm for long term. Another type of external person who is interested in knowing the accounting information is the supplier. Now, let me clarify, suppliers are also lenders, but the earlier lenders are the long term lenders who provide for the capital, and the suppliers are the person who has who has given goods and services on credit. So, they are the creditor for short term. They need to be paid within a year according to the terms of the credit purchase that company has. So, you will only send your goods to another vendor or to another party only when you think that I can give them on credit only when they are sound enough, financially sound enough to give me back on the due date, right. So, they are also interested in knowing the short term liquidity, the short term cash and financial position of the firm, so that they can get back the amount which they have given on credit for the goods which they have given on credit. So, suppliers are also interested in understanding or analyzing your financial statements or accounting informations. Another type of stakeholder, external stakeholder who are interested in knowing the accounting information is the tax authorities. Now, why tax authorities? Because there are a lot of legal taxation rules that a company need to compile with, and a company need to file different taxes also, indirect taxes and corporate tax on their profit also, and maybe dividend distribution tax, capital gain tax. So, a lot of taxes are there. Also the depreciation rates and all these things are being given in the tax laws. So, these tax authorities are interested in knowing the numbers, knowing the financial statements and financial information of a company, so that they can check, they can monitor whether the company is compiling with all the rules given by the tax authorities or not. According to the company's law and in our country, every financial statement of a corporate which crosses a threshold of some turnover need to be get audited by an independent auditor. So, these auditors are also definitely will be peeping in and seeing the accounting information for the company. Another type of stakeholder that we are going to study is the government and legal bodies. So, there are different other laws also that governs the operations of business and corporate form of organization, like Companies Act, like SEBI, if the shares are listed in the stock exchange, and there are other legal compliances also. So, these they are also interested in seeing into the accounting information, so that they can check, they can monitor the compliance of various law. Another type of stakeholders are public at general. Now, public means what? Public will be interested in the accounting figure in the capacity of maybe the analyst, maybe the researcher, maybe the journalist who are interested in studying the economic development, who are interested in researching upon the theories of business management or the corporate finance or the production and operations. So, these guys, they are also need accounting information, so that they can build up their research, build up their theories, so as to get into the their analysis. So, these are different type of internal holders. So, another most important external stakeholders who are interested in knowing the accounting numbers are the customers. Now, not every customer will be interested in knowing the accounting figure, because they are only interested in buying some good quality good at some good prices. But if the customers are industrial customers, then they must be interested in knowing the financial numbers, the accounting numbers, so as to negotiate on the price, as to see different aspects of this. These days customers are also interested, the general customers are also interested in knowing the accounting figure, because a lot of issues are there, like corporate social responsibility and the transparencies, ethical issues For this, a customer may be interested in knowing the accounting information or the financial information. So, these are different type of stakeholders, different type of users of accounting information, which we have categorized as internal and external user of accounting information.